couldn't actually not provide you with a live commentary as we usually do in during volatile weeks or volatile days, if you prefer. So we had Bank of England earlier. So the focus in general this week was in the Bank of England, even though it was expected not to be an uneventful event. However, what we have currently see from the Bank of England was pretty much something that it was expected. So they indeed kept the policy unchanged, kept the rates untouched, and indeed the Parliament voting remain on the side of no changes in the policy. However, what actually it was quite important today from the monetary policy statement, it was the tone that the Bank of England used. So we have seen a more cautious tone despite the progress in the vaccination program, despite the continuous better than expected economic data releases. So there was also there was some cautious tone, and there was no sign of a hawkish stance from the Bank of England, even though that was one of the scenarios that the markets were forecasting for today's release. So I will share pound right now with you. Just let me confirm that all the social. Okay, I can see that we are live in both YouTube and Facebook. That's brilliant. So everything works. I will keep Facebook just to reply to the Facebook comments. Okay, nothing so far. So excellent. So I will share. Let me just excuse me for a second, just to share the pound, so we can go everything together. We can go through what happened with the pound. So share. Okay, good. Caption. Hello everyone. Hello Emma. Hello Emma. Okay, Emma was Aussie. Okay, Emma, excuse me for just a few minutes, just to cover pound, because it was we had the Bank of England, and we have seen quite a big dip on the pound. So I would really like to start with cable as the very first. First asset of today's live analysis. So, okay. Let me keep this over here, and I will follow your questions later on. Yes, just to cover cable as the very first asset. So that's pound yen. Here we are, 1 hour chart. So here we are. So we have seen, actually, what we have seen, guys, is a big dip on the announcement of around 80 pips. Sorry, that, however, is nearly 100 pips from yesterday's high, and the key actually psychological 140 area. So we have a dip, we have a rotation lower for pound around 109 pips lower after the Bank of England non-hawkish stance. So this looks to be a bit odd. However, it looks to what is the case over here is that the sentiment were actually on the side of a hawkish stance. So this disappointment and this the fact that we have seen nothing else than a cautious from the Bank of England is what added some pressure in the intraday, in the near term, in the very short term for cable, bringing it at the lows of 139 territory, even though it sustains that 139 round number floor so far today. So if I move on to the 30 minutes chart, you can see that it's struggling to break the 139 territory round number. The support that we have seen for actually for the whole week. Okay, so and this was on the disappointment of a more hawkish stance from Bank of England. So it's all about the sentiment. I'm afraid this move wasn't really expected. So there is nothing really clear other than the sentiment from the market participants in regards to this dip of cable. So we have seen cable moving at 138.90 more precisely. Okay. Uh, 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 Amid a stable Bank of England, which actually once again highlighting that they will remain focused on the labor market despite the improvement that we have seen, the growth of labor market, the recovery, actually not the growth, the recovery of labor market so far. So they remain focused on the labor market, and to what extent and how quickly the labor market will react, will recover, the wages will increase, the unemployment people will be recruited again, will be re-employed again, and so on and so forth. Because as you already know, what actually helped significantly the labor market in UK, it was the relief package. I don't remember how exactly it was called, but it's that wage support scheme that the government established since last year. So this is what actually kept the labor market, supported the labor market in the UK. However, the wage support scheme ends in the end of September. So this will be the key question over here that we could resume, or we could have a look again after the central bank's holidays in August, is whether by the end of the scheme, the labor market could significantly recover in order to avoid an extension of the wage support scheme. So once again, the Bank of England, just to finish with what has been done so far from the UK side and from the Bank of England statement, once again they are focusing on the labor. They have repeated that there are still a lot of inflationary pressures, which is it's not something new, actually, something that we're facing on a global basis. So they indeed repeated that they expect actually something that we have seen from Fed 2 weeks ago, if I'm not mistaken, or last week. I'm not. I lost the counting, to be honest. But yeah, that the inflation pressures to be transitory. This is a word that we heard from Fed as well. So they actually they follow a bit, they follow partially at least the Fed steps. So they have been sounded a bit more cautious ahead of the risk that they're facing during the summer. You know that the UK has extended the lockdown, so officially the reopening of the economy, the full UK reopening will be in the end of July, if I'm not mistaken. So. Uh, uh, so the reopening will be the 19th of July. So we have another nearly 3 weeks to go. So despite the growth of the economy, all this robust data that we're getting from the UK, something that remains a key downward risk for the economy is this delay of the full reopening of the economy in the UK by July 19th. But the overall picture remains quite positive, actually very, very optimistic for the UK economy. That's why this is something that in the long term could could continue supporting the pound as well. So indeed, UK continues to give signs of recovery, okay, and this expected to remain the case because anyway, the main factors are the fact that the vaccination is doing great. Actually, UK is on the top three countries that they are doing great in the vaccination. Also, We have seen recovery. We have robust exports. The latest data that we had, it showed robust exports also in the UK, despite the Brexit risk. Also, we have seen slowly some kind of a recovery signs in the hospitalization and in general in the hospitality and tourist sector, something that is quite odd if we consider that they haven't fully reopened their economy yet. But nonetheless, the overall outlook for the UK economy remains positive, optimism. But nonetheless, intraday, we have seen that dip lower. Right now, the cable is trying to recover some of the losses that we have seen on the during the Bank of England release. Right now, 139.36. However, a confirmation of a reversal for the cable can be seen only if the asset reversed at least 50% of this dip, and that should be around 139.40 territory. Okay, so that should be more precisely 35. 139.35 is the mid area of this dip. So we need to see a break and a move above 139.35 area in order to suggest that the intraday, in the very, very short time frame intraday, the asset is turning back to the upside, ready to retest once again the 140. So for the time being, I will shift to the 30 minutes chart, because we're like covering the intraday stuff and the short-term stuff. You can see that the asset looks oversold already in the 30 minutes chart, with RSI, however, you have seen that for 3 consecutive sessions, it closed outside Bollinger's, trying to recover right now. But what is quite interesting is how the momentum indicators actually perform right now. So if you actually cannot see stochastics. Let me put it in. Let me stretch it a bit so you can see stochastics as well, because it's quite important. In the 30 minutes chart is my short-term stochastic indicator. 533 is my settings for a short-term stochastic. So as you can see over here, MACD indeed turned negative on this dip. However, the signal line remains very, very close to zero. Okay, something that keeps the intraday, the 30 minutes time frame outlook a bit neutral. RSI on the other side retested the 30 barrier, the oversold barrier, but is turning higher, is pointing high right now, while stochastic has already paused, or actually it hasn't confirmed it yet, but it's ready to have a bullish cross above the 20 barrier. So being a bit patient, if we indeed get a bullish cross from stochastic along with an improvement of RSI and MACD, this could suggest a rebound of cable back to where it was yesterday. However, as I said, the key resistance intraday it will be the 139.35 level. Now, let's just before we finish with cable, let's see also the overall picture in the daily chart. So as you can see, the asset, it's been traded below the 20 and 50-day moving average for nearly 7 days in a row. Okay, holding, however, if I just okay, let me just put this on. Sustaining, however, a support above 39, which is the 61.8 Fibonacci level. So it is actually it is holding like a neutral daily outlook right now. Is holding because it's like in between the 50 and 61.8 Fibonacci level, something that it doesn't really give us a clear sign on whether it will actually recover or whether it could eventually extend it back to the lows that we have seen back in April 2021. However, as you can see, this neutral bias is being supported by momentum indicators as well, with RSI stuck for more than a week at 40 level and quite flattened as well. MACD turned negative, but the signal line is very, very close to zero without actually an indication of further negative bias. So we remain in a neutral bias in the daily chart for cable as long as it doesn't break the 139 level to the downside, is significantly break of the 139, or as long as it doesn't rebound and break and actually perform above 140. Okay, so neutral bias it is for cable, at least for the medium term and intraday basis. In the intraday basis, as we have just stated, is negative. However, it found some support in the last four sessions above 139. But we need some kind of a confirmation, further a clear rebound over here in the 13th chart. Now, let me just scan a bit what happened so far. Something that I missed telling you earlier in regards to Bank of England is that despite all this cautious tone, they keep extending, they keep providing upwards projections in their gross domestic product growth. So they have extended their projections to 5.5% from 4.35% in May. So what that suggests, it suggests that they believe in the continuation of the recovery. And anyway, as I was reading earlier, overall, if we, in contrast with the Bank of England, overall the markets are expecting that UK economy could be expanded up to 6%, 6.3, if I'm not mistaken, percent. It could extend its GDP in the 2021 by 6.3%. So this is in contrast with the recession that we have seen last year. So let's move on. Okay, I'm on it, guys. I'm on your questions right now. I will have a look at your questions right now. So I will start with Emma. She was the very, very first person here. Okay, let's start with Emma. Okay, at the same time, right now, I think we have the US data. Let me have the calendar also next to me just to monitor what's going on. Come on. So, I like that there is interaction between you guys below the chat. That's good. Help each other is always helpful. Sharing the knowledge. So we had, okay, yes, the US data release, the US data are already out, actually 13 minutes ago. So we have durable goods missing significantly, actually. 0.3%. I will share my calendar just for a few seconds, just to follow me. Hide, share the Chrome tab. Okay, here we are. So guys, after Bank of England, we have some data, actually a bit of disappointing data from US. As I can see over here, we have durable goods at 0.3%, missing expectations. The forecast was at 0.7%, and even though the previous reading was revised higher, significantly higher, so from 1% it was revised to 1.7%. Okay, revised up. Mixed expectations for May, though. The quarterly basis, the PCE in a quarterly basis remained stable at 2.5. That's the core, sorry. The GDP for the first quarter indeed came in line with expectations. Anyway, it was a final reading. So indeed, 6.4% in an annual basis and quarterly basis at 4.3%. Initial claims are higher than expected. So that's another negative reading, unfortunately, uh, for US labor market. If I'm not mistaken, we had last week a negative reading from the jobless claim. So that's 3 weeks in a row, if I'm not mistaken. Yeah, I missed for 3 weeks in a row because yeah, it's 3 weeks in a row. So okay, that's something that could add pressure on the dollar. Let's check a bit dollar. Even though it doesn't. I don't think that it has reacted. So okay. So dollar was largely shrunk off of the mixed data. Okay, Stuart posted earlier, and I didn't even notice that. So I will. Okay, let's quickly have a look then on the dollar index, and I promise Emma, I will get back to your Aussie. Don't worry about it. We need to stick to the current affairs first before anything else, right? So where is my dollar index? Come on. Here it is. Okay. So as you're saying, it says dollars largely shrunk off the mixed data. So yes, indeed, as we just said, as we just mentioned, initial jobless came higher than expected. Continuing claims lower than forecast. Durable orders missed forecast, while the advanced goods trade report revealed about an in-line result. So it's more or less pretty much quite negative overall session from data perspective from the US. So let's have a look on the 30 minutes chart in our dollar index. So it was prior the data, it was at 91.79 territory, dipped like just 10 pips lower. So it's at 91.67, dipped at 91.67. With actually, we have some kind of a bearish crossover here in the 30-minute chart. However, this needs further confirmation. So remains below the 20 period moving average. MACD is neutral. RSI posting a bearish cross in the 30 minutes chart, while stochastic is posting a bearish cross, while RSI remains below its 50 territory. So that was on dollar index. So let's have a look on Emma's Aussie, since we're discussing about dollar index and the US session. So let's have a look. Okay, to your questions as well. And my mistake, you couldn't see my MT4. You were watching calendar still, but I'm bringing MT4 back in. Perfect. So let's do that. Okay. Aussie over here, my dear Emma, looks that it got a bit moved to the upside on the data releases. This is the 30 minutes chart, okay? This is the 30 minutes chart. So it retested today's highs. So it broke today's highs actually. 0.7580, there should be 88 level. Yeah, breaking slightly the high of the day. So found some support on the weak US data. So let's see what the indicators are telling us. So MACD growing to the upside in this 30 minutes chart. RSI broke 50 territories at 57. Stochastic has actually, it keeps extending to the upside since this morning, since the European Open. Yeah, that's correct. Since the European Open, so it keep extending higher. It hasn't managed to enter the 80 territory, the overbought territory yet. So, however, it still holds to the upside. posting some kind of an upwards trajectory. So, but this is just the 30 minutes chart. Let's move on to the 1 hour chart to see what's going on. As you can see, it's stuck a bit, it remains a bit, it lacks a bit of an overall direction. So after it topped at 0.76, 78, more precisely 70, let me just confirm that. After it topped yesterday at at just a breath below 0.76 area, it remains sideways. But if I zoom out a bit, you can see that Aussie since last week it remains in an upward trajectory, a bit narrow one, but it keeps posting higher highs and higher lows. Okay, guys. So can you see that? You can see that stochastic it keep pointing to the upside. RSI holding and move above 50 actually since last week, since the uh, yeah, since last Friday, was it? Yeah, since last Friday. So sustains. You can see that the momentum indicators, despite these choppy sideways moves that we had seen today for since for how many sessions, it was quite important, for 20 sessions in a row, despite this choppiness, despite this sideways move, the momentum intraday at least remains positive for Aussie. You can see that MACD remains positive, flatten a bit, just confirming this consolidation, but remains above zero. RSI remains above neutral. Keep so so you can, by just monitoring the momentum indicator, you can see that we have neutral to positive bias intraday for Aussie. Now let's quickly shift to the daily chart just to finish with Aussie. And we have seen we have seen last week a significant dip in, especially in the commodity currencies. However, the assets so far has recovered around 23.6 23.6 percent of the losses that we have seen since the beginning of May. If I just focus on last week losses, it has already managed to recover around 38% of these losses. So this is a key. Actually, it's a stronger retracement level in contrast with the 23.6 level. So the fact that it managed to sustain for 3 days in a row above 23.6 Fibonacci level and keep extending slowly to the upside is pretty much um, um, increasing a bit the positive bias for Aussie. However, despite these 4 days, these 4 consecutive days of gains, nonetheless, it remains well below its 20 and 50-day moving average. So it remains in a negative outlook in the daily chart, in the medium term picture, unless if we see a turn back to the 20-day moving average. As you can see, that is a confluence over here of the 20-day moving average and um, the just and the support that we have seen since mid of April. So actually this is 2 month support, the 0.7650 area. So there is a confluence of the 2 month support and the 20-day moving average. So this support has now turned into a key resistance level. In order to we need a break of that level in order to suggest that the medium term outlook for Aussie has changed into a positive one. Okay, so if I just clear a bit this mess. Okay, perfect. You can see that Aussie, even though that's too soon to be mentioned, but there is some kind of a head and shoulders formation. Of course, not confirmed yet, but just something to have in mind, to keep monitoring the near future, because this is like, it looks to be a formation of head and shoulders with neckline at the bottom of this formation, which is at 0.7565. Okay, the asset already, however, is already above this neckline, but that doesn't really, there is no a clear confirmation with whether indeed it will get back to the upside and to the high territories that we have seen for the whole year, around 78 territory, 75, 77 territory, or whether this was the very first, the initial sign of a potential reversal in the long term from Aussie. This is just to keep in mind. This is a long term. It's not an intraday analysis. It's just I noticed that head and shoulder right now in the breakout of the neckline, which is actually coincides with a 200-day moving average breakout, but for the time being remains above this neckline, above the 200-day moving average for 3 days in a row. But as I said, only a move above 0.7680, above the 20-day moving average, it could change the negative long-term outlook for Aussie, because you can see how aggressive to the downside the MACD lines are. RSI for 2 months in a row below 50, unable to to uh, uh, to uh, present a breakout of 50. So yeah, an overall long-term negative bias for Aussie. While, as we said, in the intraday basis, it was ranging. However, it has posted a rebound in the US session up to 0.7587. So the near-term resistance remains at yesterday's highs and the 75.96 territory. So hopefully that was helpful, my dear Emma. Let's see gold. Okay, let's see gold from Michael. You are obsessed, guys, with gold. I have noticed that in the last few live analysis in the that we are doing in social media. So everyone is asking for gold, and you repeatedly ask for gold. So that's fair enough. So gold, yeah. Okay. So okay, I don't really need to repeat what happened last week, but what is quite important is this stability that we can see for 6 days in a row above the 61.8% retracement level. Remember, 61.8, I say keep repeating and repeating, is one of the strongest retracement levels according to the Fibonacci theory. So I had applied a Fibonacci retracement level from this up leg that we have seen from the 2021 bottom down to 1670 territory, up to the peak that we have seen the last few months at 1920 area. So you can see that despite this dramatic fall last week, the asset sustained so far and move above the 61.8, so above the 1770 territory. So that's quite important, because okay, for the time being, it's obviously consolidating, bouncing between the 61.8 and the 50% retracement level, but you should keep an eye on these two levels, because they actually present resistance and support level for gold. So 1765, so that's below 61.8, but also is the low that we have seen last week, just a breath below the 61.8. Okay, so 1765 and 1797 are our immediate support and resistance levels. So 1765 support level, immediate support level for the asset. 1797 immediate resistance level for the asset. So a breakout below the 1765 could resume this decline that we have seen last week. Okay, could resume this decline because it was last week's floor is the 61 point Fibonacci level, while also we have parabolic SAR above, well above the price change. So that's a bearish sign. We have the asset extending below the 50, 220 day moving average. We have RSI below 50, okay, flattened at 30 for the time being, confirming this consolidation that we've seen the last 5 days. But yeah, an overall neutral to negative outlook for gold, which it could confirm a negative, the turn back to a negative trajectory if it breaks the 1764 territory. On the flip side, a break above, as I said, this key resistance level of 50% retracement on this 3 months rally. So a decisive break above 1797, it could it could actually trigger our attention to a potential recovery. However, guys, we need to see the asset turning back above 250-day moving average in order the outlook to turn back to a positive one again. Okay, this is the medium-term picture for gold. So for the time being, sideways, but the overall outlook looks more negative than positive. So intraday, okay, let me get rid of these rectangles. And let's see what is going on intraday. So intraday we have seen okay, obviously the range that I have that we were discussing earlier keeps like it's still on. I mean, 1797 and 1765 is the top and the low level of our range over here that the assets stuck since the 70th of June. So so far today we have seen gold rebounding, okay, from the 1772 level up to 1788. So the intraday picture for the asset, actually let me put the 5 and 9 crossing over here. This will help us. So we have seen some kind of a rebound so far today. However, as you can see, if you focus on the last 3 hour session, you can see that the asset revert nearly all the gains that we have seen the last hour. Okay, but it sustains. It didn't manage to break the 1780 level. So this actually, if we had a break of 1788, 1780, we could claim that this is a tweezer, an evening stack formation. That's not the case because it closed above the previous low territory, and for the time being is sustaining a move to the upside with actually an intraday bullish bias. So even though it looks to run out of steam already, the fast moving average are like flattening a bit. RSI flatten as well. Stochastic just posted a bearish cross and crossed the 80 level. So that's a bit mixed. That rally looks to run out of steam already. So keep an eye on the 1780 territory. This could be our immediate support level, and this could trigger the attention if it's broken, because it could imply that the asset is ready to turn back down and retest the low area of our 6 days range, while okay, while a move back to 1786 level, it could imply to an extension of the so far rally um, since the beginning of the day, actually, since the Asia session. As I can see, parabolic SAR keeps supporting the bullish bias for the intraday for the 1 hour chart in gold. So let's wait and see. Okay, euro dollar. Let's shift it to euro dollar. Okay, here we are. So gold and euro. Okay, we have some Facebook questions as well. You're asking also for euro dollar. Christian is asking. Okay, we are on it right now. Markets are really consolidation. Not necessarily. Um, not necessarily. Rules change on this 28th of June on gold in Europe, on Basel III. How will that affect gold? Ah, I'm not quite sure, my dear Simbusiso. I'm not really sure whether it will indeed have any impact on the gold. To be honest, I haven't followed the changes. But for the time being, gold, as we already seen, is under gold prices are under pressure. So let's continue with euro dollars as Michael was asking. So euro dollar. Okay, let's start actually with. So let's okay. So far this week in general, this narrowed to actually so far this week we have seen dollar a bit more soft. Okay, that's why we've seen some kind of a bit of appreciation as a because we have a lot of oversold conditions. I mean, in euro dollar, in Aussie, as we said earlier, in cable, as we saw earlier. So last week's performance, put the majority of the assets in an extreme condition. So that's why this looks to be a bit of a this looks to attract some buyers or some or some profit taking because the asset was already overbought since last Friday, if I'm not mistaken. So they went Thursday, yes, since last Friday. So we found some ground. So it recovered up back above 119.50 level in general, other than the profit taking, this looks to be also on the view of an ongoing recovery in Europe and other major global economies as well. Okay. However, the euro dollar remains below its high territory, so it remains, as you can see from the technical perspective, it remains under pressure. Okay, it's still actually around. Let me measure this. It's still around 400 pips below away from the high territory that we have seen in May at 122.60 territory. So so far away from 122.60 high. It managed, however, it's actually tested from three days in a row, the 200-day moving average, but it didn't manage to actually decisively break that level and to sustain at least a move above it. For the time being, the euro dollar remains in a lot of pressure with momentum, with selling momentum increasing, with negative momentum increasing. So as you can see, it did lift it slightly, but you can see that it's far away from all the moving average. Parabolics are above the price, something that is a bearish technical sign. MACD is negative with a bearish cross of the signal line and its histogram line. RSI managed to recover from the oversold territory, but it's just at 39, far away from the 50 territory, and with the slope a bit weak. Okay, slope a bit weak to the downside. So actually, the so far this week's news or data, if you prefer, hasn't really significantly helped the euro. So even though we had some good data this week, for example, we had IFO from Germany earlier, we had PMI. Okay, these have actually supported slightly euro dollar, but they haven't managed to change this medium term negative picture of euro dollar. So euro dollar remains down. Well, actually, far away from the highs that we have seen in May. And this dip actually came, remember, after the Fed hawkish tail. So, yeah. So medium term remains in a negative base as long as it doesn't as long as it remains below 122 territory. You can see that Bollingers are extending lower. Expanded Bollingers suggest a lot of volatility as well, but yeah, it remains under pressure. Now, intraday. So, by the way, guys, for the daily chart, keep an eye on the 120 level, okay, to the upside. Intraday, as you can see, it forms some kind of a, if I just, okay, let me draw my regression channel. Okay, it has posted. If we focus just on the intraday basis in the 1 hour chart, you can see that the asset is holding some kind of an upwards channel since the beginning of the week, since Monday. So posting, it's in a, if you can see that the regression channel is quite, it satisfies actually an upwards regression channel. So higher highs, higher lows, consolidating within an upwards trajectory, rebounded early, rebounded from days lows at 119.17. Okay, managed to recover some losses. It broke the mid level of my regression channel and remains above it. So the intraday basis, the intraday bias for euro remains positive, even though it looks a bit over. But let's see what the 5 and 9 crossing has to tell. What is actually presenting. So as you can see, 5 and 9, I keep pointing upwards. So the bullish cross came like on the beginning of the European session. So this morning, parabolics are below the price. So this is a bullish sign. RSI at 58. But what is important is this upward slope. By connecting the swings, you can see that it's in an upwards trajectory. The same stands for RSI. So you can see that despite some dips, it held some kind of an upwards trajectory since yesterday. Okay, so connecting the lows, and actually, as you can see, it remains below 80, so there is further steam to the upside for euro dollar intraday in the short term, as long as we don't see a move, a bearish cross of stochastic, or a move back to just over here to below 11940 territory. A move below 11940 territory could retest once again 2 days floor at 11915 level. Okay, so support, immediate support at 11490, 11940, sorry, while resistance is at yesterday's highs, this twisted top at 11970 territory. So immediate resistance and immediate support levels for euro dollar as it sustains a positive outlook in the very, very short time frame. Yeah. Okay, let's put with your question. So what's the direction of Swiss? Okay, Swiss yen. Swiss yen. Okay. Emma, I will reply to your question, okay? I have seen your question. We will reply. Michael's asking Swiss yen, one of the most volatile assets, actually. So, Swiss yen. Okay. So, Swiss yen, interestingly, actually, despite the dip that we have seen last week, is one of the few currencies, dear Michael, and thank you for bringing that up. It's one of the few currencies that managed to recover significantly after last week's drift. While in the meantime, as you can see from the momentum indicators, it sustains its positive momentum. So it managed to recover more than 50% of the losses that we have seen last week. It turned back above its 50-day moving average. While over here, the MACD line remains well above the zero line. Okay, that suggests that they sustains positive, that the bulls are still are regaining the control of the asset. Okay, however, so far today, it didn't manage to provide an extension of this rally. It flattened a bit. But yeah, as we can see over here, this flattening could signal some consolidation, the entrance in a consolidation mode for the next few days. But keep an eye on the 12040 territory, 12035 more precisely, because a move today or tomorrow at the end of the week, a close actually below that level could open the doors again to 11890 territory, to the lows that we have seen in the beginning of the week. So a closure, confirmed closure at the end of the day, below 120.35 could open the doors to the low area that we have seen the last week. Now, however, if it sustains, however, its gains, okay, along with the break of the key resistance at 121, which is actually just a breath away, it's not far away, it's just a breath away of the round 121 level, it could open the doors to to an extension, to actually to a resumption of the upward trend that we have seen since the end of March. Okay, so a break of 121 could open the doors to the upside, could resume the this rally that we have seen for the last 1 to nearly 3 months time, along with a retest of 121.57 and potentially a return back to the 122 highs territory. So that was on Swiss. Intraday, however, you can see that it's consolidating in this 1 hour chart, dear Michael. Sideways movement, lack of direction for the time being, stuck between the 120.05 and 120.70 territory for 1, 2, 3, 4, 5, 6, 7, 8 hours in a row. So keep this range as your immediate support and resistance level, because a breakout of each of any of those two of these two barriers could imply to a near-term rally if it breaks the 120.70, or a near-term decline if it breaks the 120.50 level. So a break of 120.76 could retest here could retest the edge of my Bollinger's 120.90, while a break of 120.50 territory could retest the yesterday's low at 120.35, which coincides with the 38.2 Fibonacci level. So keep an eye on any breakout, on any exit of this range that we have seen the last few hours. But yeah, it's holding a choppy mode. It's holding a range, lack of direction for the time being. Very tight Bollingers over here, confirming this consolidation. Yeah, yes, I'm afraid this is just flat. You can see flat MACD as well. You can see a confluence, actually a clash of 5 and 9 exponential moving average pointing to the right hand side. So pretty much confirming a consolidation mode. RSI also flatten. Stochastic also flatten at 56. So nothing, the lack of direction intraday for Swiss yen, while the daily chart presented a strong rally with key resistance at 121, and while a reversal back below 120.35 could open the doors to 118.90 once again. Emma, I saw your questions in regard to Bitcoin. I will reply to you, okay? Dollar cat. Dollar cat. Okay, here we are. So dollar cat over here. So I would like also to have on the other side my oil as well. Where is oil? Okay. US oil. Okay, excellent. So as you can see, okay, this is let's start with the daily chart. As you can see, so far this week, Canadian dollar actually found some support, and this is mainly has to do with the rise that we have seen in oil prices. So this week the oil did an attempt and retested the 73.80 territory, while the if I just if I just generally speaking, if we consider the WTI benchmark, it actually hit the 32 months high at 74.25. So this is something that supported and has extended the demand to oil correlated currencies such as Canadian dollar. So that's why we have seen dollar CAD drifting lower, so benefiting, gaining some ground against US dollar, dipping to 123 territory or even lower. Actually, it was 120 to 50, so reversing 50% of the gains that we have seen in June, went back down, and it found support on the confluence of 50-day and 50 Fibonacci retracement. So it's stuck right now at 123 level. Um, Actually stuck like since yesterday at 123 level after it gained, after it recovered, after it benefited oil, on oil smooth extension higher after oil prices extending higher. However, um, the asset, as you can see, I will put the double stochastic once again just to be. Actually, I won't put the stochastic. We are in a daily chart anyway. So have a look on my on the flattened RSI in the daily chart. Okay, so we have in front of us OPEC plus meeting next week. If I'm not mistaken, it's next Thursday. So on the expectation of OPEC, we might see oil or even dollar cut as well remain a bit cautious, remain a bit sideways ahead of OPEC. So the OPEC Plus will have a meeting on Thursday discussing about the production and whether they will rise demand or not. Okay, so this is an OPEC Plus meeting. So it's OPEC along with his ally. So on the anticipation of this meeting, we might see some limited reaction on oil correlated currencies such as dollar CAD. For the time being, however, the dollar CAD um, has stuck at 123 level. Okay. However, as we keep repeating, in the long-term picture, it remains well bid. I mean, the Canadian dollar on the prospect of a higher oil prices as the economies are reopening, as more fuels will be needed, and so on and so forth. But I'm sure you're not really don't want me to discuss about the long-term picture. So okay, yeah. For the time being, stuck at 123 level, a turn back to 122.50 could open the doors to the next support level at 121.90, which is the confluence, which is actually our 20-day moving average. So key support for dollar CAD remains the 121.80 level. Okay, while a rebound, okay, and a break of 123.60 level could open the doors to June's high territory. However, for the time being, remains neutral. As you can see, how dodgy these two candles are. So intraday, in the meantime, okay, the high of the day is actually struggling to break the one the this continuous this high, the high of the day at 123.15. It was retested several times so far, but yeah, pretty much stability is the word once again here. Fast moving average are like they cannot really give us any signal. They have clutch. They pointing to the right hand side. MACD nearly neutral on nearly zero actually. RSI found some support, but it's at 50 territory. Stochastic posted a bullish cross like uh, 3 hours ago. So it keeps pointing upwards, but yeah, the slope is not like strong. So this rebound, if I just shift to the 30 minutes chart, this rally might run out of steam already. So yeah, what can I tell you? Just stick on what you see. If it's consolidation, it's consolidation. Depends on which time frame you're mostly trading. So yeah. So let's move on. We have covered Suzy and Michael already. Um, yes. Thank you, Victor, for replying. So okay, you have solved it between you. Yes. Euro Swiss. Euro Swiss. Euro Swiss. Euro Swiss. Euro Swiss. Okay, let me keep an eye on the Facebook as well. Okay, no further questions in Facebook. Excellent. Okay. Euro Swiss. Okay. Euro Swiss on the open found further demand, so it posted 109.75 high, corrected slightly the last few hours, found some kind of a support, just 10 pips lower, consolidating since then. However, it sustains, despite this decline, the fact that it sustains this floor, it sustains the high territory that we have seen, the high territory, the high, nearly 1 month high territory, is something that extending the bullish bias for Euro Swiss intraday. So you can see that it's in an upwards trajectory. So okay, I can see Bloomberg TV right now. Stocks hit intraday record highs. So no one asked about stocks, guys, and actually is the hot topic of the day. Um, so, okay, once I finish with Euro Swiss, we're gonna have a look on stocks, but because they hit, according to Bloomberg, intraday record highs. So, yeah, okay, let's finish with Euro Swiss. Euro Swiss remains in an upwards trajectory the whole June. For so far today, after posting this high, it corrected a bit with a sideways movement because it was overbought, keeping a sideways movement, keeping a floor out 109.64. So sustaining, however, the month's gain. So you can see that these gains have been seen like on the 3rd of June, so 21 days ago. Okay. So momentum remains positive. You can see MACD above zero, RSI sustaining a move above 50. Stochastic turns slightly lower, but it hasn't really. Um, it has actually turned negative, like. 5 hours ago, it lacks out of steam. The slope is like looks to be a bit narrow. Immediate support at 109.65. This looks to be more of a correction of this rally rather than a pullback or any reversal sign. But always have on your side. Always use some kind of a support and resistance tool, any one that you wish. I will use once again my favorite Fibonacci, so you can see that um, sustains 30% of its gains. So as long as we don't see a turn below that level, below the 109, a closure, a confirmed closure below the 109.60 territory, then the positive bias remains in this 1 hour chart. a break of that level, it could open the doors to another retest of the bottom over here, of the 2 days bottom at 109.50. But as I already mentioned, it remains in an upwards trajectory. Okay, so these pullbacks for the time being looks to be just correction on this 2 weeks rally. Okay, so in the daily chart, broke last week, actually entered last week the upper Bollinger Bar area, is keep extending to the upside, um, um, with with the next key resistance area in the medium term picture at this double top and the confluence of Bollinger's daily Bollinger's at 1099 7 territory. This is the key medium term resistance area for Euro Swiss. Pound Swiss. Oh, you would like all the pound, the Swiss crowns. Before we go to the pound Swiss, let's see a bit the stocks because it's a hot topic, as I said. S&P 500 and US 800 hit intraday record highs. So let's have a look on S&P, on the USA 500 and USA 100. Sorry. Come on. And I will get back to you with the pound Swiss there, Michael. Okay. Okay, let's start. Okay, here we are. We had the previous record high for S&P 500 was seen back on the 50th of June, so last week, and it was at come on, at 4267 levels. So this has been, come on, this has been retested once again today. So let me move to the 1 hour chart. You can see that the asset, it's a bit messy. Let me get rid of the rectangle so it will be easier for you to okay, delete. Excellent, delete. Okay. So as you can see over here, guys, we have a full recovery of the stocks of the USA 500 over here. It get back to the record highs that we have seen on the 50th of June, recover every losses, and it's actually keep extending to the upside as we actually going through the US session. So you can see that actually this is 1 hour chart. Let me actually let's stick to the 4 hour chart because I have not, you can see that it was consolidating for the last 9 sessions in a row. So since Tuesday afternoon, it was stuck within the 4250 and the 4240 and the 4260 area. However, it managed to break on the US, on the European Open today, that range. So it managed to exit that range, but managed to break it to the upside, extending its gains and actually a recovery fully all the losses that we have seen in the first mid of June. So as you can see, the momentum is keep rising to the upside for S&P 500. Of course, this is the 4 hour chart. Let's move on to the 1 hour chart. You can see that after this slowdown that we have seen, actually, let me zoom out a bit. So you can see that it significantly dipped, but it started the recovery on Monday. Okay, on the this Monday actually, it started recovering until it actually MACD fully turned into the positive territory with signal line posting some bullish tone. We have seen some kind of a descending bullish bias since Tuesday. However, this looks to resume again. As you can see, the signal line has just posted a bullish cross. So bullish crossing MACD in this 1 hour chart. RSI retesting 70 territory, okay, with furthest into the upside, further area to be covered. Our stochastic is above 80, starting to slow down a bit, ready to turn back lower. However, everything else is supporting further extension. So you can see that MACD keep extending higher. RSI has further area to cover to the upside. Parabolics are remain below the price. Exponential intraday exponential 5 and 9 moving average are keep pointing upwards, so there is further positive bias in the intraday basis for S&P 500. So we should see similar picture to in US 100. But before I move to US 100, let's see the daily chart, because and actually a fresh record high today, actually closure today to a fresh record high for S&P 500 could uh, could actually open the doors. Let me just quickly use my okay Fibonacci. Come on. Okay, let me use my Fibonacci expansion. I need to shift to the daily chart so we could identify together the next um, the next potential resistance areas for the asset in case that it extends further to the upside. So by plotting my Fibonacci level, my Fibonacci extension, we could see that the next retracement, the next resistance areas for the S&P 500 over here is at 4280, and the very next, the 100 Fibonacci expansion, it is at, okay, that's dropping a bit, is at 4364. This is the 100% Fibonacci expansion if the asset confirms a record high by the end of the day, fresh record high by the end of the day. Anyway, the momentum is extremely positive. If you are following the weekly chart and the medium term picture, you can see that we are in an upwards trajectory since last year after the pandemic mania. So it keeps slowly extending to the upside, giving us, I don't even remember how many record highs we have seen since last year, but it's keep extending and posting fresh record highs. So the stock market has been in a remarkable rally. Similar picture could be seen in USA 100. So actually, there was an even bigger rise than S&P 100. So you can see that it's keep extending higher. It actually um, broke the previous record high. So it just posted a fresh record high at 14,397 for the time being, and is keep pushing higher. The momentum, the positive, the bullish momentum in USA 100 is even stronger, is stronger actually than USA 500. So upwards trajectory extended since the beginning of May. Bollingers are keep pointing to the upside. Fast moving average are keep pointing to the upside, well supported by the 20-day moving average. MACD, you can see this is quite clear. It's keep extending higher and higher. RSI the same, stochastic the same. So yeah, on the broke the 123 Fibonacci extension. So the next resistance for USA 100 in the medium term is at 14,780. Intraday now in the 1 hour chart, you can use either Fibonacci expansions or Fibonacci extensions, up to you for identifying, or even pivot point analysis for identifying the next resistance areas if they have not already broken. But yeah, is keep pointing to is keep actually pushing to the upside with momentum, not giving a sign of a reversal or a pullback or a correction yet. You can see that the fast moving average are keep pointing to the upside. So that was on stocks, guys. Hi, Andrea. What direction is pound Swiss? Okay, pound Swiss. Pound Swiss. Pound Swiss. Okay, guys. This is a final call for questions because I'm quite tired. Okay, so I have seen that I need to reply to Michael in regards to pound Swiss, Aussie yen, Euro yen from Martin. Adi, there is no better time frame for entry. This depends on you, okay? This depends on your strategy, on your uh, uh, on your preferences. For example, I find 5 minutes chart and 50 minutes chart too fast for me as Andrea. Okay, it's too fast. It's too fast. I cannot follow it. But this depends on you guys and the strategy that you have developed. Okay, so I cannot really recommend a good or a worse or a good one or a bad time frame. That's solely on you, on your personality, on the time that you have to spend, that you have on your free time, the free time that you have, and you can spend it on watching the charts and etc. That's solely up to you. Okay, so pound Swiss, pound Swiss. Okay, pound Swiss remains under pressure. Michael, I think that's why you brought that back to our conversation. So remains under pressure. It didn't manage to recover. So keep. We have big tails, big wicks to the downside. Remains outside the Bollingers. Okay, MACD turned negative, even though signal lines remains positive. RSI flatten. Actually, we might see it as actually it looks to be ready to enter some kind of a consolidation mode because it's already overbought for 3 hours in a row. RSI has flattened, is holding the 200 period moving average as its immediate support level. So it's already oversold. So it's actually it looks like it has entered already some kind of a correction mode, at least for the very very short time frame for the next few hours. But overall, as I can see, remains under pressure. So keep an eye on the 127.63 as our immediate support level, because a break below a level could extend this decline that we have seen the last few hours down to the next support area. That is, it can be seen at 127.50, and the very next one is down to, actually let me put them Fibonacci level. It could help us finding the extension of it. So the next support area, if the 200 period moving average breaks, it will be down another 15 to 20 pips lower at 127.50, 127.40 territory for pound Swiss. So under pressure, in a negative bias intraday, in this 1 hour chart, dear Michael. Okay, the daily picture, we don't have something clear yet, but it remains above the 20-day moving average. So in the medium term remains positive, intraday is negative. Aussie yen and Euro yen, and I need to call it a date. So Aussie yen and Euro yen, two yen crosses obviously. Aussie yen sideways since yesterday, no clear direction, stuck in between 83, 85, and 84, 13 territory. So this this could be seen as our immediate support and resistance levels. Flatten fast MAs, flatten RSI, flatten stochastic, I cannot really tell you something, Martin. I'm afraid this is sideways, at least in the 1 hour chart. 30 minutes chart, still lacks of direction. I'm going through all of my momentum indicators, my moving average, my Bollingers, and there is nothing like to trigger my attention for the time being. You mentioned 1 hour chart, but I cannot really see something. I can see a lot of dodgy candles, a lot of um, uh, like I can see these three, the last three sessions, you can see some similar length of wicks to the upside and to the downside, implying to a bit of an indecision. Okay, so yeah, there is no clear indication over here, nothing that could confirm or could increase the odds of either an upwards move or a downwards move. So you need to be a bit patient in regards to Aussie yen, I'm afraid, because at least I can in the 1 hour and 30 minutes chart there is a lack of direction. Okay, Euro yen, the last one, I think. Yes, it is the last one. Um, okay, it's posting some kind of a lower highs since yesterday, sustaining a floor at 132.10 territory. It looks like a descending triangle, but yeah, you still insist in 1 hour, Martin. So yeah, it is forming some kind of a descending triangle. I zoom out. Okay, so in a descending triangle. So keep those trend lines. Keep those trend lines in your chart, because a break above this descending trend line could imply a bullish rally intraday in the short term for euro yen, while a, a move below 132 could open the doors um, um, could open the doors to uh, let me just on could open the doors to yesterday's low territory, but for the time being, it's consolidating, stuck within a descending triangle. So it's similar with Aussie yen. I'm afraid you can see that my 5 exponential and the 9 exponential moving average in the 1 hour chart are literally clash. It's one on top of the other, both pointing to the right hand side, along with the 20 period moving average, along with the 250 period moving average. So everything is pointing to a sideways movement, lack of direction. So I'm afraid these are not good choices. At least for the time being, just keep monitor them. But for the time being, there is the only thing that I can see is uh, uh, some choppy moves for these two assets. Now, in regards to the daily chart, but you ask 1 hour chart, but anyway, in the daily chart, it has rebounded significantly. Actually, it has, if I'm not mistaken, it has recovered more than 50% over the decline that we have seen in June. So it has entered a positive outlook in the medium term picture, in the daily picture. Emma, we reply in regards to Bitcoin. I'm not sure whether I could state it out loud, but yeah, we don't no longer offer cryptocurrencies. Okay, so it's a matter of time to be completely removed from our MT4, but unfortunately we stopped providing um, cryptocurrencies. Okay. If you check your emails, I'm sure that you have received officially an email from our company in regards to cryptocurrencies and crypto pairs. Okay. Yeah. Okay. Yes. Yeah. Yes, indeed. Victor also replied to you earlier. So stating that it was yes, indeed, you're right. So it was. I saw Victor's replying. Yeah, we have stopped trading. Yeah, we have stopped providing cryptos as Victor told you earlier. So yeah, that's it. For if you need any further clarification, don't hesitate to contact us. We have a live chat in our website. So support team will reply you on SWOT if you need any further clarifications in regard to cryptos. Okay, so guys, I need to call it a date. I run out of steam and we're here like more than an hour, definitely. So I will call it a day. Thank you very much for attending today's live streaming. So hopefully you enjoyed. If you need any further help, we are here to help through our social media channel, and of course, um, uh, if you contact support team, they will bring us in contact if you need any further assistance from us. So thank you very much for participating in this live streaming. Hope you are having a great day ahead. I don't think there are any significant releases other than a lot of Fed speeches later on, actually. So keep an eye on any comments from Bostic Williams and ECB's Schnampel as well. I can't really pronounce it. So nothing from data releases for the day ahead. So yeah, we'll resume again tomorrow. Take care. Have a great day ahead, and see you again tomorrow. Thank you. Bye bye.